Yeah, Manali. Yeah, so Mithul, we are good to go now. I'm starting off. Yeah, so very good, everyone. Very good evening to all our partners, dear colleagues, and team ICICI Prudential AMC. We have a very special guest with us today, Mithul. Mithul joined ICICI Prudential AMC in 2006 as a fund manager. He is currently manages ICICI Prudential Dividend Yield Equity Fund, ICICI Prudential Long Term Equity Fund, which is a tax-saver fund, ICICI Prudential ESG Fund co-managed, ICICI Prudential PSU Equity Fund, ICICI Prudential Equity and Debt Fund. Prior to this, he was a research analyst for multiple key sectors. Mithul started his career with ICICI Prudential AMC, has garnered an overall work experience of 15 years. His core competency lies in portfolio management and security analysis. By qualification, he is a chartered accountant. So thank you so much for joining us, Mithul, today, and we are looking forward for your insightful presentation. So over to you. Thank you.
Thank you. Uh, See, okay, to start with the whole concept of energy, uh, it is directed towards, there are some key questions. Like people think that it is not going to be a growth sector, it is a very dull sector. It is an unimportant sector from the not so much happening in the sector. And I would like to start the presentation from that side. I think this is still a very relevant sector from a global as well as domestic parlance. And I will talk about why. So, first, uh, more from India perspective, in order to do a upliftment of lives of the people, you need to create a basket of consumption of commodities and resources. So, unless there is a increase which you can create in these both these basket, then without that the upliftment is very difficult. Now, and we'll talk about this more in detail about it, but when you look at the Western world, when you look at the developed countries, the kind of lifestyle, and then that's what everyone aspires, right? When you aspire a better lifestyle, it is a combination of all commodities underlying as a goods or services, or somewhere there is a large amount of a consumption of energy as a resource. Let's look at Western world and the kind of growth that they are seeing in terms of the consumption of the resources. Now, I'm sure everyone would have heard of Chat GPT, and that's something like, and the AI as a technology. It is becoming slowly a part of our lifestyle, and it is going to see a wide adoption over the years. But do you know, in order to train a Chat GPT, what kind of resources were required? And why a training? Let's address this. It's a simple thing. A Chat GPT is like your brain. It once you give it a lot of information, it needs energy as a resource to train itself. So our brains, human brains, would have been trained over years, and here we have to train a computer brain in a very short period of time. So the power consumption, if you look at for training this Chat GPT, was around 1,80,000 household equivalent of US. If you look at the power data consumption of a US on a per capita basis, it's around 13,000 kilowatt hour. Whereas if you look at India's power consumption on a per capita basis, it's around 1180 kilowatt hours. Where is 13,000? Where is 1180? Right? A greater difference of more than 10 times there. And on that high base, in order to train this Chat GPT, the power consumption required was around 1,80,000 equivalent of household. So these are the kind of newer applications which are driving energy consumption growth in the Western world. Despite they being far higher than where we are, they are still seeing a good amount of growth due to all these newer applications getting developed. How do you, and this is just not the end. The same chat GPT, if you put up let's say a question to Google search saying that what's mutual fund, active mutual fund versus passive mutual fund, and the same you put it out into a chat GPT, again there also the consumption of power is a difference of 10x. So the whole new application plus on an ongoing basis also, in order to operate it, we are actually consuming more and more energy. So this kind of consumption drive in the West itself is also driving the overall global level consumption for the sector. Apart from that, now coming back to India, uh, everyone talks about that India is going to see the demographic dividend over the next 10 years or so, or next 10-15 years. Now let's look at China. When it went through that demographic dividend, and they are ahead of us in that cycle. So when they went through that demographic dividend cycle, what kind of demand growth and GDP growth they had? So they somewhere had the GDP growth in the range of 8 to 10% per annum between 2000 to 2010. In the same time period, their power consumption growth was 12% CAGR. So somewhere between 1.2 time plus as a multiplier to their GDP was their power consumption growth. And that is what happens when you have a faster growing GDP, you also have a faster growing energy demand. India going to go through similar cycle, and I don't know whether our GDP will be 8 or 10, but for sure we know that it's already relatively higher in the world. And if that continues, then we will also continue to see a higher power demand growth. And that marks the favorable cycle for the Indian energy consumption basket on an overall. And this was just an example through the power. We can talk about all the sub-segments of the basket of the oil and whether it is oil and gas, whether it is power, all going through go to see some or the other format of demand growth within either through renewable or through hydrogen. We can talk about various technologies, but everything ultimately boils down to overall energy as a basket to grow. So we are very confident that this basket is going to continue to grow over the next 5 years, and this is or maybe even longer. But the 5 year is a good time period to again reevaluate where we are in terms of cycle. So now that marks the base for this discussion, saying that in order to see the upliftment, energy as a basket is essential. Globally, there is a demand for power and overall energy as a basket growth, and India is no exception. India is going to see even further growth due to its own demographic dividend playing out. So these three marks the set for why look at the sector. Now, the other two important points that I want to leave the audience today is that if you look at overall power or as a sector, then it has a long cycle. Unlike some of the other sectors where the cycles are not very long, here the gestations or the whole overall cycle plays out in somewhere between 15 to 20 years. So the last cycle, when it was around 2000 to 2008, used to be a huge shortage cycle, or it, in fact, till 2012, it continued to be a big power deficit cycle. After 2014, there was a sudden drop in the power deficit, and that was led by the supply coming through. So what happens is, in generally, if you want to put up a thermal power plant, it takes anywhere between 6-7 years. If you want to put up a hydropower plant, then it takes around 8 to 10 years. And if you are going to put up a nuclear power plant, then the timelines are even longer. So once you have a shortage cycle, and that's what happened between 2000 to 2008, there was a shortage in the power sector, and it took at least 7-8 years for those deficit to really be fulfilled. The supply side response actually took that long. And that is when, from 2014, when the supply became surplus, then it lasted also for a couple of years. It lasted till 2021, 22, some part. And after that, now the surplus is gone. We are in a fairly balanced cycle right now. And going forward, even if we take an assumption of a 6% power demand growth, then the kind of supply which is already planned in the system suggests that we may not be able to meet the evening peak hour deficits. And then this deficit will keep rising across the number of years. All projects getting planned now will take some time, at least 5 to 7 year time period for the non-solar or non-renewable ones to come through. And that is where the interesting development in the sector is. So you are in at the start of an upcycle. The upcycle is already started. You are somewhere in the middle of the cycle, and this middle of the cycle phase itself is going to be longer period. So anywhere between 3 to 5 years is where before which, sorry, by the time you reach a top, at least 3 to 5 years of time is still there. So you have a long visibility of the cycle from here for the sector, and that's make the sector more interesting. Now, to make it further interesting, it's not just the power generation where there is a change happening. Even on the transmission and the distribution side, which are the other two large subsegment of the sector, there is a lot of development either due to technology or due to the demand pattern shift that is going to create a lot of demand of our investment in the sector. To give you some simple idea on the same, earlier for a 10 megawatt power plant, you needed a 10 megawatt of transmission line to evacuate a power. Now, if you see, for the same 10 megawatt of power, if you want to deploy it in solar, then first that you have to, because the PLFs are 25%, so you have to actually put up a plant which is larger in size, which means you have to do it 4 times. So the 10 becomes 40, and you will need an evacuation power of a 40. Despite that, the plant will not operate at full 100% throughout the year, but you need to make more larger investment. So on an aggregate basis, of course, the aggregate numbers does not go up by 4x, but there will be a number aggregate which will be much higher than the 1.1 time, or maybe it is around 1.5 time. So that kind of change we'll see. Then what happens because of this renewable power in India being cheap? And it's a fantastic thing because it helps us to remain more competitive in the global parlance as well. So then what happens is we now have two peak hours during the day. One is during the day and one is during the evening time. During the daytime, which is the solar time, the consumption is already much higher than the evening hours. So if you see the last year's number, it's around 252 gigawatt during the daytime and around 231 gigawatt during the evening hours. And this the deficit that we talked about is based on the evening peak hour deficit, not on the morning hours. The morning hours, we fairly believe that any shortages felt can be easily met up with the solar or the wind supply over the next 2 3 years, because these projects do not take longer gestations like the other ones. So there is a high probability that execution of these projects can be speeded up or can be fastened so that we can have more supply coming up faster. Now, the challenge that happens is how do you consume so much of power during the daytime and suddenly have a sharper reduction in the power during the evening times? So government or even the distribution companies can incentivize invest the consumer, saying that okay, we'll have a differential pricing. And of course this is something not which is discussed today actively, but it is already happening in the global era. So if you look at global countries are started to do that, and maybe India at some stage does that. And when you for in order to do that, you need a different distribution model. You need more smart meters which can actually track demand consumed during different days, time of the day for each consumer, and charge them accordingly. At the same time, when you look at distribution also, there are solar rooftops and all these schemes that is getting discussed, right? So earlier the distribution company used to supply power to you, so it was a one-way communication. Now, going forward, there will be a two-way communication because they also need to at times evacuate excess power from your solar. So then in that case, they will need further more investments. So all these developments are happening. Coming to oil and gas, another basket of investment in this energy. Uh, Again, here there are two legs of investment ideas to look forward to. The last 2 decades or last 15 years have seen some of these oil and gas companies get derated. The reason for the derating has been uncertainties in predicting the numbers for the sector. So when you're trying to predict a profitability for some of these oil companies, it was very, very uncertain. First, the commodities prices were always uncertain, and over and above that, certain policy level things used to affect them. So whenever the crude price used to be very high, the losses made by these oil marketing companies was not known how they will be allocated between oil marketing companies and the upstream companies. So at the end of the year, there used to be a number which used to come out, and that is where people used to get disappointed. So now what has changed? Now at least there are some more I would not say it's the best of the policies in that sense, but it's the predictability part has improved materially. To give you an example, today when the crude prices goes above $75, we know that the crude producers like ONGC will make at least $75, though there will be a windfall tax, but above $75 they will not make. So at least you know that any prices up to $75 and these people will make it. Second, on the gas side, earlier they never used to get any change in the gas price so easily. Now it is market linked price, and that makes it much more market linked predictability. Thirdly, for oil marketing companies, if you see any price for the almost there is some kind of a ceiling of a consumer price for the petrol diesel. And if the crude price goes above that, then the oil marketing companies takes the hit on their profit and loss. But at the same time, these companies are allowed to recoup in some way their losses when the prices come down. And only after that, the consumer prices starts to roll down again. So that's something, and if the predictability improves, like if you see all other sectors where something like a consumer names and all, where the predictability is high, the multiples are always very high. So we believe that this sector has now seen a good predictability in their earnings, which will lead to some re-rating for them. Along with that, the petrochemical, the overall refinery chain will also continue to see robust demand growth for from India's basket for consumption. And this is what we have seen even in China. So China's overall industry also size is much larger, and that's been growing again at a very healthy rate. So India would also go through that same cycle over the next 5 years in both these sector, and we feel that this is a interesting sector to look at it at this juncture. Uh, Now, talking about whether the timing for this NFO, is this NFO timed well, or is the best of the timing in that sense? See, as a house, we have got this sector long back. So around 2018 to 20, also see if you see in 2020 in many of our funds, this sector used to have a 20-25% of the allocation into across various funds, especially the large ones like the the equity and debt fund that I manage. It used to have a very large allocation there. Those are the kind of allocation that we had in the sector earlier also. Uh, Now, why launching this fund at a time when the sector has already gone up? And if you see the basket of all our other NFOs launching, we have generally tried to launch NFOs at a time when either the sector is in down cycle or there is not much interest in the sector. So this is slight deviation and something similar to what we did it with our transportation fund. We launched it somewhere in the mid cycle to up cycle, and we knew that the top of the cycle is still some time away. If you look at even in both power and oil and gas, we are not at the bottom of the cycle. We are somewhere in the mid cycle, and this mid cycle phase would continue for the another 3 to 5 years. So before a top of the cycle will be made, we think there is still some amount of money to be made in the sector. Now, another thing about launching this NFO today is that if you look at the dates of the NFO, it will be closed on 16th, and if and after that will be the budget dates. somewhere we will have some, so the fund will not be fully deployed before the budget. The fund will be very gradually and slowly deployed before the budget. And if something goes wrong during the budget time, then we have money ready for investment. So either taxation change or something here and there, if it affects, then some we will have a good opportunity to invest into the budget. Is there a big risk that we see that the budget will lead to a big market up move? As of now, given where the valuations are, we think a lot of optimism is getting priced in. So there is very little probability that one can say that the markets will rally very hard after the budget. So that's something that we are looking forward to. And if in case there is nothing negative that comes out of the budget, the fund will anyways be fully deployed, or the portfolios will be created the way we want over the next 3 to 6 months. So that's a slow and gradual way of investing at a time when the valuations are very high. Keeping in order the safety for the investor will be going gradual in this deployment. So with this, I'll take a pause here and open the floor for question and answer. Thank you.
Thank you, Mitul, once again for the wonderful brief that you had given on the NFO. So, definitely, all our partners must have received their insights already. But we have received few questions from few of our partners. I would like it to display on the screen just for everybody's sake. Just a minute. Yeah, so I'll just read out for everybody's convenience. So, my first question to you is, what sectors are typically included in an energy opportunities fund? I think you have
So
already covered, but just give
yeah,
it just about it.
yeah,
Yeah.
no problem. So basically, power and oil and gas are the two major sectors. Now there are various sub segments within that. When you look at power, it is generation, it is distribution, it is transmission, and in that also a lot of capital good companies get covered. A lot of EPC based companies which get covered. So, for example, NTPC will if give a power order of a thermal power plant to BHEL or an L&T, then L&T and BHEL will give out the sub orders of some of the packages to some of the companies within the same basket. So then there will be an EPC order right across going through many other companies also. At the same time, if there is a transmission order given by Power Grid or any other player, then it will be sub-distributed to many other execution companies. So that's how there are many companies. If you look at the number of stocks, it's around 180, 85 stocks in the whole basket of the sector. Now coming to oil and gas, in oil and gas again you have upstream companies like the ones of ONGC Oil India, and then you have midstream and downstream, which is where the refining companies, oil marketing company, petrochemical companies also, and some of the gas distribution companies gets included. So it's a broad based chain where you have a lot more diversified portfolio creation opportunity available.
Thank you. So, yes, moving to the next question. So, how do fluctuations in global oil prices impact the performance of an energy opportunities fund?
It will be function of how one predicts. So something similar to commodities fund. If you look, once you have a call on a commodity, and if it goes right, then it helps you very favorably. Sometimes it goes wrong, it hurts you. Despite that, what happens is you try to look at companies whose volumes are going to grow at a much higher rate. So when you are able to find companies which will see a good volume growth, then the impact of the price fluctuation can be reduced into the portfolio. So that's how we would be looking at it. Uh, and if you, as you know, it will be a combination of power and oil and gas. So oil prices alone will not be a big driver of the portfolio return on either side, negative or on a positive side.
Thank you. Thank you once again for the brief answer. So, moving to next question. What are the current trends in the global energy market that could affect an energy opportunities fund?
Yes, so like one trend that we talked about how energy demand growth across the globe is happening. So like if there is an energy demand growth in the Western world, That is also leading to demand growth for the transmission and the distribution side. So many of the Indian capital good companies or the EPC companies are seeing the benefit of these orders coming to them. Apart from that, there are changes like, okay, there are newer technologies like green energy or renewable energies like solar and wind. They are also playing an important part. So earlier in the previous cycle, we used to see only a large part of thermal power plant coming up to meet the shortages. Now, this time it will be a combination of renewable and thermal. So that changes the landscape. So the overall earlier, the number of companies now which participate into this whole segment increases due to that. So we are seeing a good positive impact for the fund that way.
Yes, thank you once again. So, moving to next question. How does the transition to renewable energy sources influence the strategy of an energy opportunities fund?
Yes, again, this is very important one. See, if let's say that earlier around 2018 and all, people feared that incremental growth for India will be all through renewable. And in that basket, NTPC being one of the largest thermal generator is at a very high risk. Now that is where the investor, or let's say as a team, we keep finding out saying that how do you avoid such kind of a risk. So we look for companies which are more technology agnostic. They are ready to invest behind all the relevant technologies, and then that's the company that can succeed when the cycle is in your favor. So when there is a shortage cycle, the company which is more open towards creating supply through all sources tends to benefit relatively than the others. At the same time, companies has to be more prudent in their allocation, so they cannot be more greedy saying that okay, let's not do a PPA and all and let's just put up a power plant. Those are very risky propositions, so it makes sense that one should look at companies which has a decent or a conservative process and who have seen the last cycle top and avoided errors doing in that. So that's how we look at. Apart from that, there are, like we discussed, green hydrogen and all new technologies will come through. So some of those companies will be also part of the portfolio at various point of time, either on the solar or on the wind or on the green hydrogen, depending on what kind of valuation each of these companies come at for some of these listings.
Okay, thank you. Yes, so moving to next. What are the key performance indicators for evaluating an energy opportunities fund?
See, the key KPIs would be similar to what all the other funds are, something similar to
Yes,
all other
yes,
sectoral funds. So you have to look at your relative benchmarks, then you have to look at your peer performance. So those continue. Having said that, apart from that, the way we would also want to evaluate is to see that are we able to protect money for the investors when things are very volatile. And I'm not talking about absolute protection, but more of a relative protection compared to the benchmark, compared to the peers. So we would want to be a bit more conservative in our investing, because this fund is getting launched at the top of the market. It's easy to get carried away at the top of the market and lose money. So it's better to avoid errors which can lead to losing of money in the fund that way.
absolutely. Yes. So thank you. Moving to next. How has the historical performance of other energy opportunities fund compared to other sector specific fund? Yes, this is an important one, I guess.
Not many actually energy opportunities fund. There is only one which got launched some time back. So very
Hmm.
difficult to say there is a big comparison which can be easily compared. There in the previous cycle, there used to be a lot of infrastructure fund, and if you look at their performance versus how they've done it over the last decade, so once the cycle was over, they really underperformed the overall broad markets for a long period of time. It's in the only in the last 18 to 24 months that some of these funds have again started to do relatively much better than the market. So some mean reversion of the returns have happened in the for the sector, as the cycle moved from turned from the bottom and improved, the overall performance for some of the funds has improved. But is it anywhere close to what it was in the previous cycle, and or has it fully recovered? And that's where, if you see, then there is still some gap left. If you even though they have done very well in the near term, valuations relative for these sector, especially the power and oil and gas, in some pockets is still cheaper than the overall market per se.
Correct. Yes, thank you. And moving to next, what are the tax implications for investors in energy opportunities fund? So yes, this is a, as you have already mentioned, this is a part of equity only. So
Yes.
definitely equity taxation will be valid. So would you like to throw some light on the same?
No, the same thing. The
Yeah,
same as the other equity funds.
correct. Yeah, thank you. Moving to next, what is the role of ESG, environmental, social, and governance criteria in managing an energy opportunities fund?
Yes, this is very important
Yes,
because of this environmental part, there is a lot more changes in the technology which is getting developed, and these
correct.
some of these development will continue for another 5 to 10 years at least. The materials one, because there are so many technologies getting evolving, that one needs to be cognizant that okay, you should be are you betting on the right technology? And like we discussed earlier, the mix of thermal used to be very high. Going forward, that may not be the case. So the way we are looking at is, we look for companies who are agnostic to some of these technologies. So if a generator is open towards uh, either a solar or a wind or a battery based round the clock power, as long as they are open towards all technologies, they will remain relevant. From a policy or a philosophical thinking, the way I can see India's approach, that is more open towards, the preference is always preferred to more towards the renewable part, but at the same time remaining cognizant that a large part of the lives needs to be connected and given power. So we will not do it if the renewable technologies are not sufficient enough to fulfill the need. Then we are open towards the other traditional sources of power as well. So there is opportunity for both. At the same time, even in the upcoming technologies, we are open towards battery, we are open towards lithium ion, we are open towards sodium. In fact, sodium is a far greater variable for India. If the sodium technology becomes viable and popular globally, then that is one technology where the raw material is available with us. So that's positive. That's how we are seeing that this is important. It gives you opportunity also. So smaller renewable, which is much smaller as a percentage of the total consumption basket, will grow at a faster rate than the thermal. So some of the suppliers to the renewable energy will be getting a disproportionate benefit in terms of demand coming for them. So all these things are how inputs that goes into our research, and that's enough, and in the portfolio creation.
Yes, absolutely. Thank you. Thank you for the brief answer. Yes, moving to next. So, how do energy opportunities fund managers risk associated with commodity price volatility?
See, like we talked about the oil and gas price impact, so that is something similar. Apart from that, as an input to capital goods, as an input to creating the projects, even that get affected with the commodity price volatility. So to that extent, it can hurt negatively. Though in the medium term, the even the final product prices goes up, so it should not affect in a very big way.
Correct. Correct. Yes. Moving to next. So, how can energy opportunities fund be used to diversify an investment portfolio?
See, this is like a small allocation for alpha generation into the portfolio. So any investors wanting to looking to create some alpha into the overall into their overall portfolio, then something anywhere between 5 to 15% is where we would recommend that you can look at allocating some part of the money of the portfolio here, especially if the money is lying in cash and not yet invested. And if you want to invest, then this is one of the opportunity that should be considered.
Correct, correct. Thank you. Yes, so this was it from our side. Thank you so much.
Thank you. Welcome.
Yeah. Any slide or any chart that you would like to present?
Manali, can we have the presentation here?
Yeah.
Manali, are you there?
Yeah,
Yeah. Hi. Can you share the presentation?
one minute.
Yeah.
Yeah.
Hi, is my screen visible?
Yeah, yeah.
Yes, it is
Perfectly
visible.
visible.
So if you can first go to the slide where the power consumption growth for all the countries are compared. Your presentation looks clear.
Manali, the presentation is not visible again.
Yeah, sure. Give me
Just
one
two
minute.
minutes.
Sure, sure, sure. Uh, Manali, you're doing it right?
Yes, just a minute, just a minute.
Sure, sure.
You can check your email also, Manali. The one which I am referring to, uh, I've just sent it to you also.
Yeah. Can you see it now, sir?
Yes.
Yeah, it's visible. Just make it a full screen presentation, please.
So slide number.
12 is where you have this power one, right? I think 11 or 12. I can't
Yeah,
see it
this
right
one.
now. I don't know.
Energy.
Can you see,
Energy.
Disha?
Yeah, yeah, yeah. It's
Okay.
visible. India energy demand and supply gap.
So, okay. No, one, this is, okay. No, no, not this one. Actually, the next one, where you have the per capita power consumption.
Yeah, this is the
The
one.
one,
This one.
no, no, no. But,
Yeah,
no,
yeah,
not
this
this
one,
one.
I suppose.
No, not this one.
Okay.
There is a per capita Canada, India, China, US. Maybe go down more, go down more. I think your sequence is different from my presentation sequence. No problem. This one, yeah.
Mm, yeah.
So this is what I was referring to start with, that how US has the power consumption demand which is different from India. US is around 13,000 kilowatt hour gross consumption, and India is around 1180. China is around 4,900. Even China is greater than 4.5 times than us. USA is around more than 11 times than us. So that's the kind of, and on a large base of USA, we are seeing such a good power demand growth happening in that country itself. And then the other chart which I wanted to talk about, the cycle for the power. If you can show the power, the India demand supply gap, where we are having, where we used to have in the previous cycle 17%. Yes, this one. So if you look at the two things here, first, the right hand chart, side chart talks about how power deficit used to be high till 2012, and then from 2014-15 onwards, the supply gap reduced, so the supply catch caught up, and then we had a complete down cycle, and the stocks got derated during that time. Stocks have started to get some point of time re-rated, but it's still quite cheap compared to what it used to trade in some of the previous cycles. So some of the stocks are still trading at a lower valuation than what it was in the previous cycle. Now, if you look at on the left hand side, the demand supply during the solar and the non-solar, the lighter blue one, 231 gigawatt is seeing a demand growth. If it sees demand growth of 6%, then on the right hand side, the red highlighted area is what kind of a deficit that you will see. So that's the kind of two important data point that we wanted to share you. Apart from that, if one more, if I can squeeze in, then the US, the consumption, the Chat GPT thing that we had talked about. If you can put up that chart as well, just do a search. Otherwise, you won't find it. It's slightly lower in the deck. Yeah, this one, the one which went up, the one before this. Yes. See, even in US, the data centers, the Chat GPT, all these things are consuming a lot more power, and that is driving the demand for power even in a country like US. So those are the three important, I think, data to look at for the overall from the overall presentation. So that this is something that I wanted to talk. Thanks.
Yes. Thank you. Thank you once again, Mitul. for lovely presentation and the charts that you have shared. Definitely a wonderful insights we have received from you. We are keen to support you in all possible ways. So grateful on behalf of all my partners and colleagues for having you here on this platform and guiding us for this NFO journey. Hoping to have many such interactions with you in future. Thank you very much once
Thank
again to
you.
you and your team. Thank you once again for everybody who is a
Thank
part
you.
of this webinar and a call. Thank you. Thank you.
Thank you.
Yes. With this, we conclude this session. Thank you.